All right. I hope everyone's having a good weekend. So I'm going to do a quick little market update. And keep this in the context of the general overall thesis. Okay. So in terms of the TradFi markets, I'm just going to be presenting the S&P 1 month chart. Like I said on my previous videos, trying to tick the week to week or day to day. It's not my cup of tea. It's too hard to do. I can always speculate. Last week, I thought we'd made a pivot bottom around Friday, Monday, Tuesday. We're going to reverse. That didn't happen. But, as we zoom out, the context of what I'm sharing with you, I think speaks the loudest. And I've got an S&P 1 month chart going all the way back to 1930s. And I've got this blue line up that's the 50-month simple moving average. And I've got the Ichimoku cloud. And what I'm aiming to illustrate here, and again, I'm not a financial advisor. Don't take this as financial advice. Do your own research. This is just my ideas on the market for educational purposes. And so what I aim to do here is, is take a look at what the highest probability forward move is based on what I've seen in the past. And that's no guarantee. That certainly can inform probabilities, in my opinion. And so we've got an N of 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18 occurrences going back to the 1930s. And what we're seeing is what the difference between a bull market correction is and the start of a bear market, and what has happened during kind of confirmation of these corrections, excuse me, and what forward returns have looked like from the standpoint of symmetry, as well as time of acceleration. And so in every instance when this simple month, the 50 simple moving average has been tested successfully, or the cloud below it, okay? So we've got a test here. We've got the cloud successfully tested here. We've got the cloud successfully tested here. We've got kind of both successfully tested here. The cloud, the simple, going all the way back. What you see is a V-shaped recovery. And they call it V-shape. It's because the angle in which it comes in is approximately equal to the angle in which it comes out. At least a V-shape, or it comes out steeper. And when did it come out steeper? 1950s, right? You had an angle coming in this angle, and it came out steeper. But what did it do? It returned to previous all-time high, okay? Sometimes that's a straight line. Sometimes it's a straight line. This is a V where, again, it came out steeper. Sometimes it's not a straight line. And this is a more pronounced symmetrical V, right? Some corrections along the way. 1966, this was a V. But what happens when it breaches? It breaches the 50, breaches the cloud. That's the start of more pain to come, right? What happens when it breaches? Start of more pain and more downside to come. Rejection, start of more downside to come. Reclaim, bounces off the cloud. Again, V shapes on its way out. This was a heck of a path on the way out, right? Try predicting these moves. But return to previous all-time high, exceeds it. Bull correction comes out much steeper. New all-time high. V-shaped recovery, 1990, new all-time high. 2001, breach the cloud, start of more pain to come, right? 2 years of more pain. 2008, breach, start of, again, more pain. September 11th, bounces right off the cloud, right back to local high, then new all-time highs. World economy stops March 2020, ticks off that moving average, returns V-shape to previous all-time high, exceeds it. And now where are we? We are in a situation where we're Ving from a symmetrical standpoint, right? We have a V-shaped recovery, okay? And so that's my view on the market. Is my full expectation is for us to return to previous all-time high next, is the next macro move. And then from there, what happens? Who knows? Do we get a correction? Do we get a back test? But my expectation from there is full-on resumption. All right, next chart. Bitcoin. This is a fun little exercise we're doing today. We're taking a little bit different of a look at Bitcoin from the perspective of technical setups, and specifically Bulkowski. And why Bulkowski? Well, Bulkowski is kind of a master chart technician, analyzed a lot of different patterns, their prevalence in terms of failures, breakout targets, bullish trends, bearish trends. And so what are we looking at here? We're looking at an analysis of all the different trends that were studied, and the performance ranking, meaning what percentage of time did these chart patterns result in actual confirmation on continued bullish movement, and the rank of that performance compared to other chart setups. And so we see the bump and run reversal bottom performed the best. And then we also have failure rank, which means what percentage of the time did they fail, and number one being it failed the least, right? So which of these patterns is the most reliable in terms of not necessarily performance to the upside, but failure? So the bullish trend remains intact and is least likely to turn bearish. That's the rounding bottom. Okay, so that's how we're going to start our little exercise today. And first chart I'm going to pull up is the bump and run reversal, and I've got the Bitcoin weekly chart up, and just to see what we see, see if we can find any of these patterns in the high time frame in Bitcoin. And let's see, look at that. Look at that. So in essence, what we have here is a very similar setup that we were seeing kind of come to play on the high time frame. What is a bump and run reversal? It's a trend reversal that's initiated in price, and then an attempt to change that trend, but rejects. You've got a lower high, a lower low. Another attempt doesn't quite get there, fails, and then you have a massive deceleration in price. And then you've got consolidation for a while, and then it kind of slowly makes its way back up towards that downtrend, reclaims, you get a throwback of that downtrend line, some consolidation in here in this area, and then an uphill run. Okay, and so how does that relate to what we're looking at today with Bitcoin? Well, with Bitcoin going back to November highs, you have a lead-in phase that's pretty clearly defined, in my opinion, right? A downtrend tries to change here, rejects, tries to come back and maybe challenge that downtrend line. This area here doesn't get it, doesn't even get close, and then 32,000 to 17,000 in 2 weeks. That's a bump, right? That is a massive deceleration in a short amount of time. Bump phase, consolidates, comes back to challenge this downtrend, throw back to the downtrend line, and now we're in this kind of consolidation phase here. And I believe the uphill run is in front of us. I could be wrong, but that is my strong belief, given especially all this negative sentiment that we're seeing across the board, when we've got just bullish structure staring us in the face. Okay. Next is the pattern that fails the least, and that is the rounding bottom pattern. Let's take a look at a rounding bottom. Okay, that's a rounding bottom, and it shows up again in the Bitcoin chart, in my opinion. And so you've got this rounded bottom, you've got this attempt to come out of this neckline, rejection, right, and then makes an ultimate low, climbs back up out of it, challenges the neckline, and this candle, right? That's what you'd expect to see at an important critical structure and a rounding bottom. Power out of it, throwback, and now we're kind of throwing back to it again, right? Let's see. We are throwing back to this area once again, and so still the bullish structure remains intact, folks. Okay. Let's go to the next chart. This is our Elliott wave Bitcoin weekly chart. And for those of you that have heard me talk about Elliott waves, I believe they show up really, really nicely in the Bitcoin chart. If we're going back to 2019, and my claim that we're still in this bull market that consists of 5 waves, 1 impulse, 2 correction, 3 impulse, 4 correction, 5 impulse. Within each of these impulses, there are subwave moves, right? And that's kind of illustrated in this chart as well, right? You got 1 impulse, you got subwave 1, 2, 3, 4, 5, ABC correction, 3 impulse 1, 2, 3, 4, 5. And within each of these subwaves, you've got subwaves. It's like a piece of broccoli, right? You take the piece of broccoli off the masterpiece, and you've got a piece, and you can take a little piece off of that, and they all kind of look the same, going down to the smallest pieces. And so let's just take a look at the first 2 impulses and corrections and see what we see. So we've got our first impulse 1, 2, 3, 4, 5, ABC correction into 2. Coming out of 2, you've got 1, 2, 3, 4, 5 wave moves to complete impulse 3. From 1 to 2, you get, coming out of 2, 1, 2, 3, 4, 5 moves to form minor 3. Okay. This here was just one massive expanded flat correction, right? So corrective waves come in all shapes and forms, right? The standard zigzag ABC is not what happened, in my opinion. In this correction, we got more of a what's called an expanded flat correction. And let me pull this up. Okay, so looking at it kind of like that, right? And so let me pull this down, make it a little bit easier to see, and see if we see any symmetry and similarities. We've got an all-time high, right? High. We've got an ABC correction to form A, ABC correction to form A, comes out ABC, comes out ABC, new all-time high, kind of fakes everybody out. Sharp reversal, 1, 2, 3, 4, 5, 1, 2, 3, 4, 5. Much more of an elongated C here, an extended C, but that's how it played out, in my opinion. And now what do we care about? Where we are now, and coming out of this 4, coming out of 4. Okay, so now we're looking at this kind of area of the chart. 4, 1, 2, 3, 4, 5, and my claim is that this 5 right here is in front of us. And so what would that look like in terms of subwaves? We have 1, 2, 3, 4, 5, and coming out of 2, we've got a 1, 2. This really needs to hold, right, for this count to be valid. This area, this high or low, 2 cannot retrace the start back here. We cannot go lower for this count to be valid. So very important critical area we're at. So long as that remains intact, 3 is in front of us, in my opinion. 4, 5 to make 3, and then correction 4 into final 5, minor of the 5th. So just thought I'd share that. I posted that one on Twitter today, so a little bit more context to that chart. What's Riot telling us? I posted a video about this on Twitter a couple days ago as well. Riot's telling us a lot, in my opinion. They told us that Bitcoin was going to make an all-time high about 1, 2, 3, 4, 5, 6, 7, 8, 9 weeks before it actually did. It's below off 5 here. It told us that Bitcoin's next all-time high was corrective, in my opinion. And what is it telling us today? Well, very similar to how it started getting moving back in 2020. You had this massive divergence on the weekly, right? Bullish divergence on the RSI, bullish divergence on the RSI. It came out for its first impulse to get over RSI relative strength of 70 in a 1, 2, 3, 4, 5 wave move. Okay. What are we looking at today? Massive bullish divergence on the weekly. Comes out of it 1, 2, 3, 4, 5 over 70 on the RSI. That signals to me that that's 1, right? Wave 1 is in. Corrective 2 is brutal, right? And corrective 2 right now, we still have a higher low. So for this to remain valid, I don't want to see Riot go below 960. I really don't want to see it go below 960 on a weekly closing basis. As of right now, we've got a higher high, or well, we have a higher high here, have a higher low, lower low on the RSI. So the same type of divergence is playing out here as well, telling me that the meat of this move, wave 3, is in front of us. All right, last chart. This is a quick one today, folks, is DXY. I've got the monthly DXY chart up, and this has been a complex correction. I definitely have not been calling this one on the lower time frame very accurately, but on the higher time frame coming out of here, I've been saying since this parabola was broken, the trend is down. We still have a downtrend, right? This is still a clear downtrend. We've got the Bollinger Band on the monthly. We're currently, retested the underside of that Bollinger Band last week. I really want to see this continue, close the monthly below 102.95. Similar to this area back here, where Bitcoin then went on to a 10x, a 7x. NASDAQ did incredibly well in both of those environments. I'm expecting continuation down. Nothing's guaranteed, but that's how I'm viewing things, guys. I hope you have a great rest of the weekend, and take care.